Welcome to Swisspreneur, a podcast about startup stories and hands-on learnings from experienced entrepreneurs. My name is Sylvan and I will be your host. Today we're here in Silicon Valley and we'll meet with Alex Fries. Alex is a serial entrepreneur and co-founded 2 companies that were sold successfully. Nowadays, he's active as an early stage investor with his own fund. He already invested in more than 50 firms. Some of them are AngelList or Facebook. We will talk about his entrepreneurial career, but of course also what he's actually looking for in startup companies as an investor. I'm sure that there are some learnings that you can apply to your business. As always, there's also additional content available on our social media channels, so make sure that you check us out on Facebook and Instagram. Before we get started with the episode, I would like to introduce you to SBB Startup. If you think that your company is a good fit for the Swiss Railways, get in touch with them or learn more about their startup programs at sbbstartup.com. Alex, a very warm welcome to the Swisspreneur Show. It's great to have you here today. We're going to talk about your personal story, your entrepreneurial career, as well as your career as an investor. And I would like to start with your entrepreneurial career. In 2000, after studying in the US, you started your company SVOX AG in Switzerland, speech software. And I would like to learn, why did you start a company in Switzerland after studying in the US? Why not going to the US market right away?
Yeah, that's a good question, actually. But I wanted to move back to Switzerland and see if I could help with the ecosystem there. I already had some experience in the entrepreneurial world, and I didn't create the idea of SVOX. Was the PhD engineer out of the ETH Zurich. So we were 5 of us which started the company, and anything that comes out of the ETH Zurich is pretty amazing, right? Or EPFL and things like that. So. We thought it was a winner. It took a long time, but Switzerland at the time, was just starting to push innovation out. There were no VC funds, almost like maybe 2 of them, and they both rejected us. So thank God for the wealthy individuals and angels that funded us. And Brain2 Ventures just started at the same time. So Florian and Jan, we were the first company to promote in the market. So it was a good time to start something new there.
Good timing for Switzerland. Yeah. Absolutely. You mentioned fundraising. Mm-hmm. That's a pretty delicate topic in Switzerland. I think it's okay and not too difficult to raise a fund for seed stages, early stage, but the harder it gets, the longer you live basically as a startup. So for additional financing, once you want to go to a Series A or something like that, that gets really tricky in Switzerland from my experience. How did you experience that back in the days?
Well, back in the days, again, we barely found any money. So it was angels that kept us alive, some POCs. And then we were lucky enough that Siemens in Germany just had launched this new accelerator, or it's called Mobile Accelerator Fund. And they invested some money in us, but not much, right? So, less than $1 million. And you cannot get too far with that, especially when you're selling speech software, something new. Navigation systems in cars were just coming. Smartphones were just coming up as well. So what we did is I came to the US with SVOX, and I opened the US market. Mm-hmm. And then we found the capital here at the end of the day.
Okay, so that was sort of your financing for growth.
Yeah, so we had to look for the money, the capital. We had already clients in the US, and where else do you go for venture capital, right? And in those days, you had to come here. So I came to California, or back to California, I guess.
So that was rather a money decision to raise money instead of an operational decision?
Both. They were both, yeah. It came with a ticket from one of us, a Swiss angel group that says, well, if you do the trip to the US, because you already have clients there, Detroit was a big client of us, all the car guys. But if you go to California, we'll give you enough money to survive. And then KTI in those days also gave us cash. They just started the program of financing companies in Swissnex. And I was the first startup to take advantage of that program. So SVOX was the first startup in Swissnex to be promoted by KTI. So they gave us some cash. So we took the advantage.
So a pioneer in several roles.
Yeah, well, I guess, yeah, that's true. That's true. But the most ironic part is we found money here, right? And it was a Swiss fund looking for startups here.
So you basically had to come to the US to be financed by a Swiss
And
fund.
that still applies today. Every time we get delegations from CEOs, we get many of them, right? I always get invited to talk to them. Like tomorrow, there's a big group coming here as well. You know, I present my startups to them, and half of them are Swiss, and they love them. Oh, you know, Swiss in Silicon Valley, blah, blah, blah. So, you know, it's sad. If I introduce them in Switzerland, they will go, Swiss startup here, no, you have no chance. So it still kind of applies that if you see it on the other side, the grass is greener. Huh?
Do you think that's only the case because of sort of also the brand of Silicon Valley, or are there other reasons why the same investment does not seem to be as appealing back in Switzerland?
Yeah, the perception is that the entrepreneur came all the way here, you know, has been able to sustain himself here at the company. So the ambition level is higher, the ecosystem is better, so they have a better chance. But it's still sad because it's the same company on both sides.
You spoke about US clients that you had even before coming here to the US. How did you actually get them from Switzerland as a Swiss company? That's also quite tricky to do, I can imagine.
Yeah. And I was chief marketing officer and strategy officer. We had a chief sales guy as well, a Swiss guy, but he was more, you know, reserved, I would say. And since I just had come back from Silicon Valley, I had still this Americanized selling bug. And I just started calling, which is in those days unusual in Switzerland, just to call companies. And I had a network here, so I went through my network and we just call and email whatever we could and get into these accounts. So, and European technology or Swiss is the best in the world compared to what you see here. So technologically, we were very easy to, or it was easy to get in the door. So what's the selling aspect of things?
All about the sales game.
Yeah, that's right.
Then according to your LinkedIn, you left SVOX in 2003. Is that correct?
Yeah, a little bit later,
Okay.
maybe 5, because I came over here, I set up the operations, we fundraised, and then I left the company. I stayed, you know, as part of the co-founding team, but I started another company.
Exactly. But you basically left before the exit happened, right?
Yes, correct.
What were the reasons? Did you find a better possibility to make something, to build something great somewhere else, or what was the reason that you left?
Yeah, it was partially the possibility to start a new company, which was Playspan at the time. And the other reason was they wanted somebody in Detroit where all our clients were. And there's no way I was going to move to Detroit. So, you know, so they actually set up a team there.
Okay.
And I left the company then.
Okay, fair point. And then you mentioned you started Playspan.
Yes.
And that was a very interesting company that you scaled up rapidly. And
3.5 years, yeah.
Yeah, and then sold with a huge success.
Yes.
How did that happen? I mean, that's a super fast move.
Well, that's Silicon Valley compared to SVOX, the Swiss way, and Playspan, the American way, right? So you have Playspan 3.5 years to exit, SVOX 10 years. Playspan raised about, I don't know, like 17 million or more. SVOX, we raised less than 10. And so on and so on. So, and then valuation-wise, you know, one is huge exit by Visa, and the other one by Nuance. Both very good, actually, for Swiss standards.
I mean, $100 million exit for a Swiss standard, that's pretty cool.
It was 127 in dollars, and 90 something in euros, and then Playspan was 290 publicly, but with earnouts was 310. So 310 million. So it was very good, both of them. But both acquired by US-based companies, which is all my startups. I tell you're going to have somebody here because I need exits. And if they don't know you exist, then nobody's going to buy you. Or I mean, you can try to make it to IPO, which is very unlikely. But
That's right. You spoke about the different amount of funds that you raised for the Swiss and the American-based company, sort of. In what way has this either slowed down your operations and your growth? And in the US way, in what way has that actually boosted your growth and your scale?
Growth of what? Of the fund?
The funding, in what way has that sort of enabled your growth of the company, like scaling up sales, scaling up revenue, and growing to a certain amount that you could actually sell the companies?
Yeah, so I don't know if you know, the model that we use today in Alpana 1 and 2, even in Ecosystem Ventures, which is my personal fund, the model is what we did with SVOX, is we invest in European technologies, which we think are the best in the world, best engineers, best ideas, but horrible sales, horrible marketing, no venture money, low valuations, and no exits. Okay? So if I put money in a Swiss company, I need exits, I need high valuations, and I need someone to kick ass, right? So what we do now, we do this Israeli model, basically. We have them create a bridge to the US, like what we did with SVOX. You keep everybody back home. But here we want you to hire the chief sales and marketing officer. We want you to fundraise above 10 million, because in Europe you can almost forget it. And we need the exits. And the exits only happen when someone knows you exist. And all the scouts are here. I don't care if you said potato chips or nuclear bombs. Every scout, from CIA to Russian KGB or whatever they're called, they're all here looking for technologies and the latest. So you got to be here, you got to make noise. And so to that respect, when we bring companies here, we have them, we mix everything. We mix the board level, we mix management, and we mix the investors mix. So we have Americans and Swiss or Europeans. And it's a great mixture because one is conservative, one is aggressive, so they meet in the middle, and then so that has accelerated our time to market, time to exit of the companies that came over here, and it's a proven model. I mean, it really works very well, and I encourage everybody to do that.
Was that also the reason why you started Playspan here in the US and not in Switzerland anymore?
No, I was just here already.
Okay.
And I met, Carl, the co-founder, and we just every Saturday, Sunday we start in Starbucks, and we start planning the company, and we start growing in Starbucks, and then we fundraised, and it took off from there. But I just happened to be here, and if you're here more than a week, you're going to get hit by somebody. Hey, you want to start a company with me? You want to join? You want to co-invest? Everybody's an angel here or entrepreneur or something. So it's a matter of picking the winners. So.
Absolutely.
Yeah.
And then how did you actually scale up Playspan to sell it to Visa? I mean, in such a short amount of time to create that success story, that's a lot of
time
work.
to market, which I tell the European entrepreneurs. In Europe, they take their sweet time. They have a fantastic idea, but it's Christmas, so everybody's sleeping, so might as well wait. And then comes February's, Sportwoche, whatever. Everybody's all the stuff. Here, nobody stops. Asia, nobody stops. They actually go 2,000%. And if you have something good, you got to give full force. Full force, because you can go to CES and you will see exactly what you're developing today times 1,000, right? The Israeli pavilion, the French pavilion, the German, they all have the same stories. So if you don't make noise, you don't hurry up, you're going to lose. So there's always local exits, right? But if you want to make it an ambition worldwide, a global company, you have to rush.
And yeah, we push.
And we push hard.
Yeah. And then the initial contact, how did that happen? Did you approach Visa? Did they approach you? Were you scouted by them or?
No, it was kind of a funny story. We were fundraising our B round and we hired an investment bank. Always with the thought, if someone offers the right price, we're willing to exit. Sure. So Deutsche Bank at the time was so we prepared the documents to fundraise a B round of 20 million or 30 million. And we said, Deutsche Bank, you go to your strategics, ask them if they want to invest. Of course, ask him also that for the right price we would sell. And so MasterCard gave us a term sheet to buy us. Somehow, it leaked to Visa. And they came back a week later with double the price. And then we say yes. Cool. But no one knows how it leaked, right?
Sure.
But that's how it happened. Yeah.
Was the exit planned for you from day one? Was that clear that you want to go for an exit?
No, I mean, actually, we start companies to grow them and make them very successful. It was early on in the virtual asset world, digital assets, right? In Asia, it was just taking off. How do you buy a digital asset in a game? A big sword, but instantaneously for 10 cents while you're playing the game, online game. That didn't exist. You have to drop it, I picked it up and so on. And how do you pay 10 cents? It's very hard. So we came up with all of that solution. But we realized after a year and a half that it's going to take much more money. But we had every gaming company in this world under agreement, which is great. We just had to implement the platform and so on. But so we thought, with a bigger player, maybe we can accelerate everything.
Sure. And in the same year, you also sold SVOX.
Mm-hmm. Same year, yeah.
So that's a pretty crazy year.
Yeah, double whoopee.
How did that happen? How strongly involved were you in that sale?
In the
SVOX sale to Nuance?
Not much. Not much. I mean, I brought some of the board members in SVOX, which they were still there. So, and I had a great relationship with the management team. Mm-hmm. And but another funny story, we wanted to sell SVOX way before the acquisition. Mm-hmm. And we were thinking, well, if we get 30 million or 40, it's going to be one top sale in Switzerland or something like that. I mean, that's how naive we were in Europe. And then came this offer of 90 million euros, and we said, wow, that's way above our dreams, right?
Absolutely.
But just to show again, US, Europe, we had a competitor in Massachusetts, exactly the same size, revenue, employees, doing text-to-speech and also speech recognition. They got acquired almost a year before for 300 million. Just because they're in the US. Yeah. So Nuance got a good deal from us,
Absolutely.
So they cut it in half, basically. Sure. But that's why when I invest now in European companies, I invest in Europe at very low valuations because they don't sell themselves too well. I bring them over here that 5 times X immediately. So
sounds like a good business model.
Sounds like a good business model, yeah. But it's not as easy.
I can imagine, yeah. How much money did you personally make from both company sales, if you are open to share?
No, I'm not going to give you the number.
Sure.
But I mean, SVOX, we were 5 founders.
Okay.
So if you have 100%, cut it in 5. And then you take another 30% away for the investors and then cut that in 5, what's left. So more or less like that. And Playspan, we have more investors. And, they own over 50% already, so our stake was much smaller than anticipated. And just a warning to some entrepreneurs if they ever listen to this speech. I know companies where they got acquired for 100 million or 200 million, and the entrepreneur didn't get a penny because of the liquidity preferences. Yeah. So that's a screw-up world, and you have to watch out. So when I say I sold SVOX for 127 million, I did not make 100 million, not even 50, not even 20. It's like, You have other co-founders, you have investors, you have angels, tax, whatever.
Sure.
Investment bankers take a cut. So,
what would you suggest founders pay especially attention to in order to avoid such a situation?
Yeah, especially keep the cap table simple. Don't have 1,000 people on it, or 100, or 50 even.
What would be a good number for early
Good
stage?
number is less than 20, I would say, with angels, right?
Yeah.
And then always check the liquidity preferences, because they can really screw you over.
What would be a good solution there?
Just 1x, just basically, well, even 1x is tough, right? You know what that means? That means all investors get their money first, what they put down. So I gave you 10 million, I get 10 million first. He gets his 5 million, he gets his 2 million. You're almost at 100 suddenly. Then everybody gets the piece of the cake.
Exactly.
Shit, there's not much left. Yeah, it's a tough one.
And then you started becoming an investor after your successful exit.
Yeah.
What led you to this transition? Because you run 2 successful companies or started 2 successful companies, and that sort of is a transition in your role from being a founder to being an investor.
Yeah, I always wanted to help European entrepreneurs, especially when they came here. And being an angel was a tough thing because you can only help 1 or 2 with small tickets. And then I said, well, I'm going to switch sides to the investor side. And I actually wanted to work in a fund here, which was impossible to find a job. I mean, it's very hard to get into a fund. You got to be from Stanford or Harvard or IMD or something extraordinary. And then you start at the bottom, and then you make your way up. So I started my own, basically, called Ecosystem Ventures. I put my own money. I put a couple of million there, started investing in startups, helping them. So I did 43 investments with that, all across the board, from food to high tech, right? Anything, because I have no one to stop me, basically. And that was very successul, that fund. I still have it. There's still some active companies. I had a lot of exits. But with that track record, I thought I was able to go to Switzerland and fundraise, Alpana 1 and 2 now. It just turned out to be very hard, very difficult. It's not in the culture of these asset managers or banks. Now it's a trend. Now you go to Switzerland, everybody's startup expert and wants to put money in startups and start companies, right? Everybody. I know so many people that are fundraising, which is basically my competition now. And I say, but what's your experience? Have you ever done a high-tech startup? I mean, opening a PR of a company is not really, to me, a startup. I mean, you start from nothing, but, high-tech, fundraising, from zero, like what you guys did, And you went to an exit or you shut down, I don't care. But you went through the cycle. And a lot of these people fundraising now don't have that experience. So they're just former money managers, right? Yeah. Unfortunately. So, but I tried everything. I tried to go to Bern and do a private public fund. We matched the money, no interest. I went to the Rheintal, where I'm from, and I said, come on, we got to do something for Graubunden and St. Gallen. St. Gallen is okay, but Liechtenstein and all these politicians have no interest, And then I went, if you're under 100 million, you cannot go to BlackRock or UBS because you're too small. I like to put 100 million tickets or partners group. So you're stuck with the family offices, private banks, individuals. Family offices think they're the masters in startup investing, so they're all going direct. You still find 1 or 2 that are giving us money now, and some private banks, and that's it.
Do you think that this is a cultural thing or a very risk-averse thing that you see in Switzerland?
Yeah, it's a cultural thing. It's they don't understand the game. It's too much risk, they think a Google happens once every 100 million years, And then you show them the whole list of unicorns. There's plenty of them, And I tell them, dude, I mean, this happens every year.
Just not in Switzerland.
No, not yet,
Only mind maze.
Yeah, and that's another topic. How did that happen? But if it happened and how it happened. But there's a few now that are getting to the $100 million valuation. And it will take a while to get higher, but it's just so tough. I think one thing is they want to go direct, which is really not the right thing to do. And then the other half is too scared. I mean, we have a few cowboys now in Switzerland. They gave us 1 or 2 million to test the waters, which is great, right? They could have given us 100 or 90, but they're too scared. So 1 or 2, so we have to wait this fund to see how it performs. If we are able to be successful, I think they're going to give us much more money the next time.
Because the money is there in Switzerland.
Yeah.
It's just not available.
Yeah, there's just not enough track record, I think.
So
only
people are
individuals.
scared.
You made money with one, I made money with one. So, but as a fund, there's not much track record, right? Sure. And that has to improve.
Do you think that this will actually improve, or do you see this more also as a risk for Switzerland as a whole country? If we don't catch up there, we might run into problems in the future.
Yeah, I mean, all of Europe, right? Yeah. Switzerland it's more secure because, we are rock stars, but all of Europe is in danger. Asia, 6 to 10 years ago, there was nothing there in funding or startups. I used to invest in India quite heavily. I lost all my money there, but now it's better. But Asia already overtook Europe in number of deals, number of funds, volume in capital. And the US is getting bigger. Asia is getting actually bigger than the US. And Europe is getting bigger but stable, or not growing like this in this ecosystem. So there's a big danger. But we have the brains, we have the innovation. And I don't know who to explain that we need to put more money into this, or we'll be in the hotel business in 10 years or 50 years.
How do you see this sort of game play out between the US and China especially?
China has the government behind. That's a problem. You can't win. China is going, we want one company in each space of this world to be the biggest. And we will fund them and help them. Absolutely. And Europeans are too naive. They think the whole world is perfect. And then comes the Americans who are all about competition and, let's compete, let's be the best one. But try to do it fair, acquire companies, grow, So, and Europe is trying to do their part, right, with new funds. EU is giving money out. Switzerland has this initiative with 500 million from Schneider Ammann, which is great. So I think it will, and you're seeing more exits from Europe. Tickets are getting bigger, larger in Europe. That's great. I mean, I get all the news, and 15 million, 20 million here. But if you read the 2018 report, global VC report, Europe was flat, right, in number of deals. More money, but in fewer deals, which is no good. So we need a base. We really need to go all ETH spin-offs, all EPFL spin-offs, all Pauscheder, you name it, we need to build that base and then get some more unicorns.
In that regard, a collaboration between Europe and the US, basically as you practice it with your model, Swiss startups coming to the US, that could be a very successful model to be, I think, number one together, if you can call it that way.
Take advantage take advantage of the US, you can say. I mean, the sad part is that every corporate fund is here. They're not in Switzerland, right? ABB has a fund here, or a Scout here, so I don't know where the fund is. A Scout here, a Siemens, Novartis, all walking around here. Tata, Samsung. And look at this guy, the most famous VC. All his funds here are Asia-based or Asia-focused. Because that's where the growth is, where the hunger is. Entrepreneurs, they are so hungry to succeed. They don't go on vacation and take, whatever.
So for starting entrepreneurs, where would you suggest them to go? Still to Silicon Valley, or also check out Asia, for example?
Yeah, Asia's a tough one. It's like Europe, very diverse. But I like this model we have the brains. You don't want to drain Europe, so keep him there, and mix it with other cultures that bring strengths. Like Americans are great salespeople and great marketeers. I mean, that's where we buy the shitty products. I mean, come on, we have much better products than they do. But you got to mix the mentality. So, and not just at the management level, also at the board level, because boards, push also the management, and at the investor level, you got to mix it up, and that's what we're trying to do.
You spoke about the hunger of the entrepreneurs. You're looking for hungry entrepreneurs. How do you evaluate the hunger? What spirit are you looking for? What should they be doing or bringing to the table?
You feel it when you talk to them. You feel it how much they bug you once they meet me. Classical example is I meet a European entrepreneur here. I love the idea, and I put it on my desk on possible investment. Yeah. They go back home, right? You don't hear from them for about a month because they didn't want to bother me. Okay, I tell them, you know what happened between now, the day I met you and the day you recontacted me, I see 10 business plans a day. And let's say I like one every 2 days. So they accumulate. Sure. And they start being better. And the guys, the 9 others are mostly, as you can see around, Indians, which are 50% of all startups are Indian entrepreneurs. Americanized or not, but Indians or Asians or Chinese, Taiwanese, Koreans. And these guys call me every single day. Do you get my numbers? What do you think about the numbers? Can we sit down again? So you are still at the bottom of the line. And I only have this much money, and I start putting money in others. By the time I get to you, it's empty. So
you would really encourage them to bother you more often?
To show hunger. Others do. We just had a case where this morning we say, forget it, because it's a Swiss entrepreneur that said, I don't like to travel, I have kids, I need to stay home. Well, sorry, man. Sure. It's a valid reason, but don't start a company if you're going to do that.
Absolutely. So,
not enough hungry.
Your model, bringing Swiss entrepreneurs here with the best technology, as you said and described it from the ETH, for example, and then mixing them with salespeople or marketing people, which the US has a great talent pool for. What other things can the two ecosystems sort of learn from each other besides these two major points?
Well, you can learn everything here, basically. But first of all, we don't move people, right? The CEO, if he wants, he can come here. But he can also stay back home. But what you learn here is the speed to execution. That's one thing you learn. And when the entrepreneurs come here, they realize it, right? I have competition here. Imagine me. I cannot sit on my butt and wait because I'm a VC and arrogant and I have the money. Good deals are gone. Like, if you even get to the best deals, they're gone immediately, right? Sure. That's why you need to know guys like this who say, Alex, I have a small ticket for you. You want to participate or so, Nice. But I have competition, so we also have to be very quick and just feel that urgency, Oh, I have a great idea. I better accelerate because there's competition in Asia, here, everywhere. So, but it's not that you learn much more. It's just everything is here. Money, scouts. It's one market, so it makes it also attractive. Unlike Europe, where it's all broken in pieces. But Europe will get there eventually. It's just we're a little bit too slow right now.
Mm-hmm. Is there something that US-based entrepreneurs can learn from Switzerland, for example?
Oh, yes. Yes. And that's another beauty about investing in Europeans. They're more careful, with money. It could be also cultural, but they always look at a profit. When can I make profit? Here it's all about growth and spending the money, right? And the Europeans are usually a little bit older, the entrepreneurs, so they're more savvy, and they really worry about every penny. And they don't go wild like here. But here we also throw them much more money.
Sure.
So they have to. But I think Europeans should be more, Americans could be more careful with products, quality, right? Like don't code and put a beta stamp and launch. Make sure it works, first. Yeah. We're the opposite. We code to die and we never launch. So that mix again is perfect.
Absolutely.
But the Americans could be more neat, prepare things better, when we do due diligence, it's horrible here. Right? They have to look for emails and documents and call the bank. European has everything in a data room, all nicely prepared, which cuts the time of investment. So, but that kind of small things is we appreciate as investors.
Mm-hmm. Cool.
Yeah.
The age that you also just mentioned, European entrepreneurs tend to be a bit older than their peers here in Silicon Valley. Is age also something that you're looking for when you make investments?
Yes.
Do you have a preference?
I learned the hard way.
Okay.
So I had 2 investments with teams under 30 years old. Thank God Andreessen was also part of one, so I'm not the only idiot. But the business founders were under 30. Engineer, I don't care because it's black and white, but the business team, and you know what happens when you give a 25, 27-year-old 5 million? They know how to spend them very quickly. Yeah. And they only hire other under 30 because otherwise it doesn't look cool in the company, right? So, but I have 2 cases where, they had retreats in Lake Tahoe and parties and jacuzzi and everybody had to be cool. And one day we went there and we said, well, let's talk about your cash planning in the future. Right. And the guy looked at me like, cash planning? What is that? Things are good, give me more money, we'll still grow. And then they start collapsing. And they hire too many people, too much coolness, and then your burn rate starts accumulating, and sales never showed up. So then you start downsizing, and we lost 2 companies, and another one, a third one, I was able to bring a 55-year-old guy, mega experience. He turned it around, and we were able to sell it. But yeah. So from now on, the business side of the startup needs to have a person over 30. That's my my learnings.
Good learning.
I don't know. Help.
You are also a supporter of the current president, President Trump.
Yes.
Why do you support him? Because here in the Valley, I have the feeling that you are more
the minority.
In the minority, maybe Peter Thiel.
Yeah, you see, the ones that support him are quiet.
Right.
The other side, it's complaining day and night, right? The poor guy cannot do anything, and the media will bash him. So the media is completely left or Democrat. California is Democrat, as you know, 100% almost. And there's 2 reasons. Either you're so rich, like a lot of people in California, from LA, they're actors. Here, they're successful exits, and they have 100 million, billions. And then, you want to help the poor and you want to give money for free to everybody. So those guys, yeah, fine. And then the other ones, the Republicans, are very quiet. You never hear about them and so on. Now, Trump, he doesn't know how to speak. The guy is zero communication. I mean, he screws up every word he says. That's the unfortunate part. But I like his policies. I really like what he did. The economy is an all-time high, unemployment all-time low, minorities have more jobs than they ever had before, stock market is up, which gives angels enough cash to invest in startups, which I need. Sure. IPOs are going to flourish. M&A is doing great. So for my business, it's fantastic, right? Taxes, he lowered taxes, not to individuals as much. So it's not that he went and the rich are going to benefit this time. Actually, I'm going to pay the same or less, or more with the cuts he did. So for my business, I'm happy about it. Foreign, I'm not American, I cannot vote. So at the end of the day, it's not my place to talk, but the world has to agree that the US takes advantage of the world takes advantage of the US, right? So if you want to sell a US car in Germany, I don't know if you knew this, but they have 25% tariffs. But the US takes German cars at 5%. So all Trump is saying is, look, those days are over. We want to be equal. You want to do zero tariffs everywhere in the world? Fine, let's compete, right? So that's one thing he said. Then, as you know, the U.S. supports every organization. They pay more than everybody else, UN, Red Cross, anything. So he says, I want other people to pay their share, the fair share. So I don't see why, other than he cannot talk, he's not. I don't think he's that bad. And he canceled this Obamacare, which was horrible. It's a good idea, but the way it was implemented, making it mandatory, was horrible. I mean, it's thank God that thing is gone, and so that's another good thing. Yeah, so I'm happy.
Cool. It's good for business.
It's good for business for sure. Yes. And personally, it's not affecting me. Sure. There's crime. There's not much crime here, so it's okay. No difference. But the infrastructure was horrible. Yeah. Before he came. I mean, horrible. I mean, airports, the streets, as you see it. Yeah. I mean,
you would not expect that from Silicon Valley.
No, exactly. So if the Democrats are so damn good, why do they let the infrastructure go to hell? I mean, they keep sucking money from taxes, and I don't know where it goes. Not on the infrastructure, that's for sure. So anyway, so that's kind of things. Don't believe what you read in the media.
In order to conclude this episode, I would like to ask you about your favorite tools and gadgets. Mm-hmm. Are there any that come to your mind when you hear tools and gadgets? What do you use on a regular basis?
I use a lot of apps, like Waze, gadgets. We just installed an Alexa at home, which doesn't work too well, I think. But it was cool for the one day we used it, right? And sure. Now it's shut up again. I don't know why. Then for our dog, we have this dog camera where you can throw things when you leave the house. So I can talk to him from my phone and call him, and he comes to the machine. And I say, hey, what's up? And then I can press a button and some treats go out.
Okay. So it's sort of remote dog control.
Yeah, it's really cool. That's really cool. But other than that, my cell phone is the only gadget I use for now. Yeah.
Obviously. Yeah. And are there any additional resources like books, podcasts, blogs that you yourself consume on a regular basis or can recommend?
I have these newsletters I get every day.
Okay, like what?
The Fortune, the term sheet is called one.
Okay.
There's another one. One is from Forbes. But I get two where it tells you every major deal or cool deal in private equity and venture. It tells you also companies that may have died or shut down and new funds. Okay. So I get two of those every day. TechCrunch, I look, and VentureBeat. And then I get a European tech.eu. And I get one from Deutsche Börse as well, once a week. Cool. Yeah, so that kind of stuff.
Awesome.
But the best you get from the valley, talking to people.
Absolutely. Alex, that's it for this episode. Thank you so much for taking the time. It was a pleasure talking to you.
Thank you.
Thank you very much for listening to today's episode. If you enjoyed the content, please make sure to rate us on Apple Podcasts. Next week, we will already be back with a new episode with Alex Fries. We will talk about the topic, jobs as a startup CEO. So, what are the actual jobs of a startup CEO? We will cover that in the episode. We will also talk about how you can make as much noise as possible, and what that actually means, you will learn in the next week's episode. And last but not least, we will also talk about the transition of the startup CEO's job from early to later stage. So make sure to tune in to next week's episode, especially if you're a founder or know a founder, because this is content that they should not miss. See you next week.